What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about Snowflake, ticker symbol SNOW. A lot of you guys have been asking questions about this company. They are going to be reporting earnings for the third quarter next week. So I figured I'd take a little bit of a jump start, do an entire analysis. We're going to take a look at the fundamentals, technicals, intrinsic value. We're going to calculate all of that. As always, if you enjoy this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. I would really appreciate that. And links to our Discord and Patreon is going to be down below. I did open up a few more spots because a lot of people have been messaging me over the last few days. And we do have that 16% annual discount available till the end of this month. So there's 8 days more left, actually 7 more days, or no, 6 more days left if you want to join and be a part of our MoneyVest community. Excel spreadsheets, Discord access, members only videos, everything's going to be included. And I want to mention that we've got our Black Friday sale for our all courses, all educational tutorials and courses. Coupon code Black Friday across the website. Individual courses 50% off, and bundles, if you want to get the bundle, that is going to be 60 to 70% off. So this right here is the bundle which has all 4: psychology, fundamental, technical, and options, 70% off for Black Friday only. And this does expire on Saturday, right? So after Black Friday is over, this coupon code will go away. Coupon code Black Friday, link's going to be down below. And of course, TradingView also has a 70% off on their subscriptions. And I wanted to match TradingView. That's why this bundle is 70% off. So link's going to be down below if you're interested in joining, and of course, getting access to all of this, lifetime access to all the educational tutorials. So let's jump over to Snowflake. And Snowflake is, once again, a data company, right? Very much similar to Palantir and the likes of other, data cloud businesses. We know that Warren Buffett had invested in Snowflake. It's not profitable yet, so expenses have continued to pile up. And as a result, revenue is growing, but at the same time, profitability is struggling a little bit for the company. So we have seen 37% growth on a year-over-year basis, 142% in net revenue retention. This is all the second quarter highlights, and 402 $1 million plus customers for the company, and 78% non-GAAP gross margins, as what you would expect from a packaged software cloud company as well. Now, this right here is the annual revenue, and we'll take a look at that growth here over the last 3 to 4 years in just a minute, but 69% growth on a year-over-year basis to well over $2 billion in fiscal year 23. And quarterly revenue has also been growing very nicely, so very consistent growth on a quarter-over-quarter basis, and of course on a year-over-year basis. And the second quarter fiscal year 24, they reported a 36% growth on a year-over-year basis as well. When it comes to RPOs, remaining performance obligations, up to $3.5 billion. That was also very nice growth compared to second quarter of fiscal year 23, from $2.7 billion to $3.5 billion. And this right here is the total customers at over 8,500. And when it comes to Forbes Global 2000 customers, they've got 639 of the Forbes 2000 Global 2000 customers. So that's, again, a pretty good demographic of customers, pretty diversified business model as well. And this right here is going to be the number of customers that are over $1 million in product revenue. That's over 402 and has been consistently growing up 62% from same time last year as well. And gross profit margins also expanding 4 percentage points in the second quarter fiscal year 24. And expanding drivers have been cloud agreement pricing, product improvements, scale, and enterprise customer success as well. Non-GAAP adjusted free cash flows, a 13% margin here for the business. And that's one of the things about Snowflake, right? It's all adjusted basis, right? It's all non-GAAP. When you take a look at GAAP numbers, they're not profitable. Their expenses are really, really high, as you would see moving forward here. As you can see, the revenue has gone from $96 million to over $2.4 billion, right? Very, very phenomenal growth in revenue, parabolic, exponential growth in gross profit, going from 45 million to 1.6 billion. But again, take a look at the expenses. They've also grown at a very similar rate. And operating income has obviously been an operating loss. It's gone from 185 million to almost $1 billion in operating loss as well. So in other words, the company is spending more money than what they are generating in revenue at the moment. This right here is their guidance. So for fiscal year 24, they're guiding for $2.6 billion in product revenues with 76% margins, 5% operating margins, only 5%. Think about that. How much are they spending in operating expenses if the company has a 76% gross margin and only a 5% operating margin, right? So everything in between is operating expenses. And as a result, they're spending a lot. Free cash flow margins of 26%. So that's something that we can account for Snowflake when we're doing our analysis, because 2.6 billion times 0.26, we're looking at $676 million in free cash flow. So we're going to plug that number in, 676 over here, and we're looking for Snowflake. And if we look at $676 million in fiscal year 24 cash flows, adjusted free cash flows, the company would be overvalued by 77%. In order for us to match these numbers, if we do a reverse discounted cash flow, let's just do 30%. Let's do 50%. Let's do 70%. And there we go. 60%, 2%. Let's just do 58. I think it's going to be 59. 59.5. There we go. So 59, so almost 60%. In other words, what this means, and this is actually considering share dilution. If we account for no dilution, if we do 62% now, 63, there we go. So what this means with this reverse discounted cash flow is that Snowflake would need to grow their free cash flows by 63% over the next 5 years and discount it back at 12%. In order to justify today's valuation trading at $170 per share. So that is an absolutely insane valuation. And of course, no company, maybe Snowflake could. Again, this is a possibility versus a probability debate. Can Snowflake do this? Yes, it's a possibility, but are they going to do it? That's a question, right? It's more dependent on probability. And in my opinion, again, I would much rather be conservative and right than be aggressive and wrong, something that I've mentioned time and time again on the channel. And as a result, we're going to obviously account for lower numbers, lower sort of conservative growth rates. Shares outstanding have also gone up from 38 million to 323 million. So basically 10x over the last 4 to 5 years. Margins are good on a gross basis, but everything else is negative, unfortunately, for the company. And valuation is also incredibly high. Price to sales at over 22. Price to earnings on a non-GAAP basis, very, very high at over 200, and price to cash flow at over 81 to 100 as well. And earnings per share expectations are also actually pretty strong, from 70 cents to over $19 by 2033. So if you account for those numbers here, if you look at, let's say 70 cents over here and then $19 by 2033, we're looking at a growth rate of 44% for the company in terms of its earnings. So if we account for, let's say, earnings over here, and $2.6 billion is the revenue number, we account for a modest, 10%, that's going to be 260 million, right? So 260 million, and then we account for a 30% growth and a 30 times multiple, 12% discount rate, 10% margin of safety, no share dilution. Again, we're looking at a very, very substantially low fair value, right? Intrinsic value is going to be substantially lower than where it's trading at the moment. Now, in terms of balance sheet, I believe the balance sheet is pretty good for Snowflake because it's a packaged software with high margins. We're looking at a balance sheet which has more cash than debt on the balance sheet, so negative $3.4 billion of negative net debt. So that's actually pretty good and pretty solid. But again, it's just a conversation around profitability. It's a conversation around valuation and what that intrinsic value is going to be for this company. This is going to be the entire sort of a technical analysis where you'll notice that we are trading inside this symmetrical triangle. We've just been making these lower highs and this higher low. And this is after the big sell-off here from $390. I can't even imagine that Snowflake at one point was trading at $390. I mean, it was just insanely overvalued at those prices. And even right now, you could argue that the valuation is extremely, extremely high for the company. So $109 is going to be a very important support. So this right here is going to be that level to watch in case we see a breakdown from this symmetrical triangle. So in case we see a breakdown here, $109 is going to be that next support. But I am unfortunately not going to be touching this at all at the moment. So even if they grow, let's say 30% cash flows, fair value obviously drops down to less than $60 for this company. And this is going to be the sensitivity grid, which you can take a look and kind of understand that, okay, what's the appropriate earnings growth and earnings multiple for Snowflake. And in order for it to justify today's valuation, let's just go back to 60. Let's just do 50 times earnings multiple. And now we're looking at $211, 50% growth. And there we go. Now we're looking at almost the same as the actual market price. In other words, the earnings would need to grow at 50% and the P multiple would need to be closer to 50 times in order to justify almost today's valuation. So let me know your thoughts down in the comment section below for Snowflake. For me, I think it's a very solid potential business that has a lot of growth. Revenue's growing, margins are expanding, but expenses are also growing at the same rate. Balance sheet's good, so there's no bankruptcy risk, at least not at the moment, but valuation's high. So at $169, $170, it is not going to be for me personally. But let me know your thoughts down in the comment section below. Don't forget, TradingView has a 70% sale. Our full bundle, full course bundle is going to be 70% off, coupon code Black Friday. And all the individual courses over here are going to be 50% off, and all the bundles are going to be 60 to 70% off. Again, coupon code is going to be Black Friday. That is available until the next few days, and link's going to be down below if you're interested in joining and taking advantage of that. And 16% annual discount for our Patreon and Discord as well. As always, happy investing. I'll see you all in the next video.